Hello, how to use candlestick charts for swing trading, up trend line strategy. We are going to use two stocks from our watch list to illustrate how we use candlestick in our swing trading. So the first one is NVR. NVR is highlighted on our spreadsheet because we purchased it and we have not sold it yet. So when we have NVR here, we are using Think of Swing platform, and it is free if you have just swap account. The chart we have in front of us is a candlestick chart, and we are using maximum daily chart. And you can set up your chart to use candlestick, and the way I use candlestick using our long uptrend on swing trading strategy might be different from how people usually use it when they swing trade. The only things that I care about now when I'm swing trading using this chart is the color of the candlestick. For instance, today is October 19, 2025, and the market closed on Friday on green. And that means the price at the end of the day was higher than the price in the morning when the market opened. So the candlestick is like a rectangle, and when the bar is growing, that means the price at the end of the day is the top length of the rectangle. Or should we say width? Maybe width, whatever the top, let's just say width of the rectangle, and the bottom width is the price when the market open in the morning. So because the price is on the y-axis and the date is on the x-axis, when you are moving your mouse higher, the price will be higher because it's starting from 0 up. So the price at the end of the day was higher than the price in the morning when the market opened. But during the day, the price went all the way to this high level before it fell back to where it closed, and it went down all the way to that area before it went back. Before at some point it closed here. So the stick, like candle, has wick, right? So the stick at the top and at the bottom of the rectangle just shows you how far up the price went during the day and how far below it dropped during the day. And when we are looking at this candlestick, it didn't drop too low below the price the market opened in the morning, but it went higher up past the price it closed. And that is pretty much the meaning of a general candlestick. But what I care more about is the color of the candlestick. So when we take this red, for instance, the price closed at the end of the day at a lower price than it opens in the morning. So the morning price was higher than the evening price. And the price at some point during the day went all the way down to that level. And at some point during the day, it went up all the way to that level. But opening and closing prices are delimited by that, are marked by the width of the rectangle. But again, is the color. When I look at this color of this candlestick, I just know that the price dropped that day. There was a pullback. I like to call it a pullback. The price dropped that day, and this is the price went up that day. And sometimes the green bar might even be lower than the red bar, but I like just to say the price went up that day, the price dropped this day. So that is one way I use my candlestick in a chart. I pay attention to the color, but I think the color can be changed in your setting as well, but I like to keep it like this, red for when the price drop, green for when the price went up. Sometimes you'll have full colored candlestick, and sometimes it'll just be empty, like the way the greens are empty and then my red are full. I just like that default option that I was given to. And while we are here, candlestick have meaning to them, like this one for instance, and this one, there's even this one having this big body. They are meaning to those candlesticks that when you are trading, some of them, depending on where they are, you'll know that there will be a reversal, a pullback, or it's going to go up from there. There is some truth to it, but I just found it challenging to get to know all of those. And in 2024, when I was using short option and swing trading strategy, I tried to learn some of them, and there are 2 or 3 that I was interested in that was kind of easy for me to locate, and I can see that there are truth to it, but it's not 100% error proof. Sometimes things doesn't turn out the way you predict it's going to turn out when you see those specific candlestick, but I think there is truth to it, and depending on what kind of strategy you are using, they might be useful for you. But I just found that toward the end of 2024 and all the way to 2025, I didn't really pay attention to the shape of the candlestick to make my buying or selling decision. I just found that I pay attention more to the color of the candlestick to determine if it's going up or if it's going down. So that is how I use the candlestick when I'm swing trading using long option and swing trading strategy. Certain things don't matter to me much. So if it's hard for you to memorize those things, get understanding them and use them, don't worry about it. I don't use those specific candlesticks to decide what will happen next. I make my I take action after the fact, not before, by predicting what will happen. So when I'm going to buy something, I like to buy when I start seeing it that it start going up. And when I wanted to sell something, I like to sell it because I'm good with the profit that I accumulate in it so far, type of things. So let's go back to we are there. So by looking at this chart for NVR, we will notice that we have long uptrend lines that we trace. We have 2. That's why we are using a maximum daily chart. By using maximum daily chart, we can see multiple years of the chart in front of us, and we can see long uptrend lines longer than 1 year time frame. The dotted line you can see at the year time frame. So the trend lines that are longer than 1 year tend to be more the valley line, especially depending on how low they are. So you want it to be able to see one full circle of a chart pattern, for instance, like a mountain, because the chart is from below will go up and pull back again to the support line it left. It could be depending on the type of stocks you are trading. So let's put things in context here. We swing trade upward, large cap upward, because they are growth. large cap stocks. So they are going up. Therefore, I tend to trade them using uptrend lines for support lines, not horizontal trend lines. Does not mean you cannot use those. I just try to connect the obvious lows of the chart, and by doing that, automatically it's going to be oblique uptrend if the stocks is uptrending. So you can see on the maximum monthly chart, where you can even see even many more years in front of you to have a overall trend of the stocks chart. You can see that is uptrending. Therefore, when you are trying to connect the obvious lows, it's going to be upward. It's going to be uptrend lines, and you want lines that are longer than 1 year, and then trying to see if you can pinpoint the full circle on those trend lines. For instance, this one, when it touched base with that trend line, it went up. Some point it pulled back to it, and then when it went up, it didn't pull back to it again. It pulled back to this one. So is this one the new valley line? We don't know. But when it pulled back to it, it went up, it pulled back to it again, and start going up from there. So therefore we can say maybe this is the new valley line, unless it's the upside wall of the mountain, and at some point it might pull back to this. But we just feel like it has not touched base with this one in the past 3 years. It's not too far, it's not too long. It could still come back to it. But those are decisions you have to make just to be able to determine which line is the valley of the mountain. And knowing those lines, you pick one that you think the stocks will most likely come back to be your entry point. So that is the second way I use my candlestick chart. So now that you have those line trades, those are your entry point. You'll analyze your chart regularly to see where the price is to where you want to buy. So when you are looking at NVR, we have those two lines that we change the color from the default gray color, so that we know automatically the lines that we want to buy at is more obvious than the gray line. So when the price pull back to it and start going up, you can buy some share. So when we are looking at NVR, for instance, we traded in 2024 using short uptrend and swing trading strategy, and the arrow facing upward are where we purchased the stock in the past, and then the arrow facing downward are where we sold after we purchased. And then we have an arrow here, we purchased it went up a little bit, and then it was done going up. So, and then it started going down. So it was somewhere in 2024 around October, and we got trapped in it. So we have not sold that share yet, and it's well over a year now. So when it reached this trend line and we have a little bit of uptrend there, we bought it again. So let's get a little bit closer. So you can see we purchased it there, we sold it there, short uptrend line there, and then we purchased it again. It went up 2 days later, we didn't sell it, and then it started going down, making lower lows. If you want to connect those lows, it will be downtrending, because this low is lower than that one, lower than that, lower than that, and so forth. So when it reached the trend line that we like to buy it at originally, with the long uptrend and swing trading strategy that we are using in 2025, and start going up, you can see that we have a low there that is higher than this one, which is higher than probably that little one, which is higher than this one. So about 3 higher lows there, and then we bought it at the first green bar that followed that pullback. So that is the third way we use our candlestick chart. And that's why I pay attention to the color, because I use the color red as a pullback, even if the chart didn't change direction that it is on. So when you are looking at it, so I will use the red bar as a pullback and the green bar as a rise in price. So I will compare the pullback, this one, to this pullback, to this one. So here we have two pullbacks there, but I'll compare the last one before the green bar. That's what I will compare, whatever I'm comparing to, or compare it to whatever I wanted to compare it to. So this one only have one between those two green, so I will compare the bottom of it. I like to compare the bottom, not the width, but the bottom of the stick candle. But it's not, you don't have to be precise, but I like to compare that pullback to this pullback, and I can say that this is higher than this pullback, and this pullback is higher than this pullback, if not about the same, and then this pullback is higher than this pullback. Therefore I have an uptrend here, and then I will purchase the arrow. I'm not sure if it's on this green or on this red or on this green. It's a little bit on the side between the two. So I could well have purchased it on the second green bar, but at the end of the day it became a red bar, which is a possibility as well. But I had to check the date to know if that's March 11 or March 12 or March 11 or March 10 that I made that purchase. But yeah, I saw a little uptrend there and I made my purchase, but guess what, it's not done. So a pullback went up. I think there is a way that I like to do that. I can make it a little bit fun for us. Let's hide those things like we are not seeing them and just remain there. So I made the purchase either this day or that day, but then it pulled back on us. So, and you can see it pulled back 3 days in a row, and then we have a little green bar there. And I don't know if we want to zoom it better to make it easier for you to see. So let's see if we can find that. I think we have not seen it yet. So, and while we are there, when you are swing trading, if you can, it'll be good to use arrows on your chart if the platform you are using to analyze your chart will keep those arrows on it for you. It's a way to journal, to show yourself where you purchased or where you sold in the past. So when we are looking at it, okay, so we made a purchase and it pulled back 2 days in a row, and then it went up, it pulled back 2 days in a row. But you can see that, so this low is higher than this one, but this low is lower than this one. So we have a downtrend here, and then we have an uptrend here. So then we have a green bar there, but you'll notice that when I purchase it on either side of, on either one, let's just assume we purchase it on this bar that became red by the end of the day, and when we purchase it will be around noon, but we don't know the price. Just by looking at the chart, just show the date we purchase it and the color of the bar. So you'll notice that for those number of days the price was lower than what we pay for it. Oh, shouldn't have done that. Okay, but then the price start going up, but still lower than what we pay for it. So although we were negative on the second purchase, the price went down and then start going up, and we are trying to see if we got in early, too early. And at this point, we will say, yeah, we got in a little bit too early, because from here, we saw an uptrend, and then we made a purchase. I'm not sure why this line is not. Let's activate that one. Okay, and then adjust it, and then extend it. Not moving it. For instance, so we saw an uptrend. You can see this, the shape of the line is uptrending, and then we made our purchase there. But then you'll notice that it dropped. If you want to connect those lows here, it's going to be going down. But then from here, we saw those. This is the same as this one, but that one is higher than this one. But then we have this low here, which is higher, no? Yeah, is higher than this one. When you put your mouse on the bottom of the rectangle, compare the price with it. When I put my mouse here, you'll notice that this line is higher up than the bottom of this. That's why it's telling you that this is higher than this one. Because when I put my mouse here, it's corresponding to something somewhere here, which is below this one. So this is higher than this one. But then we have this rise there. So that is how I use my candlestick. I'm just comparing the red bar delimited by the green bars to each other to see if I'm seeing higher lows, higher pullbacks. They are the lows, they are the pullback. So I want to see higher. This higher than this, higher than this, higher than this type of things, that I know that the stocks start going up. It's time for me to buy at the support line that I targeted. It's just a confirmation that, oh, it's done going down. It's done going down. Because when it was coming down, if I just say, okay, it touched base with the support line, I'm going to buy it here. It may not be done going down. It might continue going down again, and I will have purchased a little bit too early and stay there until it's done going down and start going up before I will see positive numbers in my portfolio, to eliminate, to decrease the chances of getting into the trade, getting in the trade a little too early. That's why I like to see few higher lows around the support line before I purchase it at a green, the first or the second green bar that follow the pullback. But again, it's not 100% error proof either, because you will see that I purchase it and then it pull back again, and all the way here I will still be negative. So as we continue, we start seeing higher lows here, but then we have this one that is lower than anything else here. So it went up, pull back, went up, pull back again. So with all the precautions that we took to buy at a higher price here, to just make sure we know that it's done going down, it still pull back to the support line, went up a little bit, pull back again. And that is why at the support line you like to buy at, is good sometimes to compare this support line to the last time it touched base with this support line, to see if it remained around the support line for a while before it was ready to go up, so that you can use that as a strategy as well, so that you do not just get in too early. Another option you could have used is actually look for, you might say, trend reversal. I will say a change in direction of the pattern, and to compare the obvious lows. Like this is a V here, and this to here, you can say that is another V here, and from here to here could still be another V, but some of them we can even go from here to here to say that is another V. So that strategy will just allow you to compare this obvious low to this one, the one that I shown you a sharp V, that you can compare the V and see if you are seeing a higher V's, a higher lows that way. That is another option as well, but I feel like it's not 100% proof either, because it could lead you to buy at a higher price. So now you can see that this will give us a profit on this purchase, and then a pullback again, so we'll be negative because that is where we purchase it the second time, and we'll be positive this day, but then negative again because this is even lower. So, and then we have this price, the price went up this day, but it's still lower, even lower than that pullback. But, and then we have those, even those we are still below the price we pay for it the second time. But we can see those V, we can, even this is kind of, it's not quite a sharp V, but you can see that, and then you have it like this, you have it like that. So when you are comparing it like that, you'll notice that this is lower, or this, whatever you want it to. Sometimes when I have a green bar that is even lower than the red, sometimes I will go with that lowest point, or we can go with this one, but it's lower than this one. So we are having a downtrend in overall here, and as we continue, it's just going up, going down. It's pretty much moving around the support line there. So this could be, the support line that you like to use as a value line and go up from there, because it remains around that support line quite a bit. And as you can see, we are still negative in that second purchase, because the price corresponding to where we purchase is around somewhere here, and you can see all the bars below, all the candlestick below this line that my mouse is drawing, this horizontal line corresponding to a price there. All the candlestick below that means those days we were negative on this purchase. For sure we are negative on the first purchase that we purchased higher up, but this second purchase at the support line, we were negative in it, but only this day. So when we continue it, we are still negative on that, and then the price start going up. So I don't even know where that one was, but I think it was somewhere here. So at this day we became positive as well, but we can see our V, and if we want to compare this low, which will show you, pretty much you are just trying to see the lowest point there, which will be this one, is higher up compared to this one. So there is a change, there is a higher low there if you wanted to go that out, instead of just comparing the lows on one side of the swing. You can take all those multiple swing and compare the bottom of them to see if you are seeing a higher lows. You can try those different options to just get you to buy it and not to buy it too early. But again, with the strategy we use to buy and to sell, you don't need to be precise. You just want to buy around the support line you like to buy when it start going up. But you don't want to wait until you buy it too late, when the price is well higher than the support line, unless that was your choice to begin with. So now as you can see, it went up and then it pulled back again. Shouldn't have done that. So, and then it pull back down, and operating below the support line. So now we start seeing it again going above it, and then it pull back again, and then start going up, pull back and start going up at this level, you'll notice that at this day we are positive in it. So this day we could well be, depending on what the price is, I'm not sure, but if we are positive this day, a portion of this day we could have been positive, and we are positive this day as well. So and then it went up, it pulled back, went up, and we could well be negative this day as well. When it's that close, not having where we purchase it in mind, it can be hard for you to know, if you are positive or not. But we can see what is going on by now just using the support line as a reference there. But you won't know for sure the days that we are positive at this point, the way we zoom. But you can see the way it has been acting up around the support line. It'll go up, it'll go down, sometimes it'll go below the support line, and at this point it's well above the support line. But guess what, it start going down again close to the support line. And you'll notice that by doing all of those, I'm not talking about anything but just the candlestick that I'm observing, the color and the direction is going. So, and this was the last Friday, 2 days ago. It went below that. So now we are going to zoom out so that we can see more. So we purchased it somewhere there, and I like to say we enter early. But do you see the mouse is pointing at about 7,408, and that price is below where the price is right now. So that means we are positive in it. So I'm going to put my mouse there again. So when I put my mouse there, you can see the candlestick that are below the horizontal line is going to be somewhere here, and anything else here is above that line. So when I put my mouse there again, all the way to this candlestick, which is 3 months later or so, this is June 26th, we were negative in it. But then probably that side as well. But let's put our mouth, yeah, that side as well. If we go with this one, those few days we were negative as well, and probably somewhere here. But yeah, that is how we use the candlestick. Now by looking at this chart, if you have not purchased it again, if you have not purchased it yet and you want to purchase it, will you purchase it? Well, by looking at it, I won't say to purchase it, because again, you can see how low it is. We don't know if it's down, going down, but I will say that a little by little it's going up. That's why I like to zoom. I like to use a maximum daily chart, because by looking at the chart far away from you, you can see the pattern that is drawing. So if we zoom out for you to see what it's doing here, it touched base with the support line, went below it, went above it, went below it, and I will just say that it could just be lingering here on its way up. It is on its way up. But if you have not purchased it yet and you want to purchase this, I will just say just keep looking at it, because if that's now you want to purchase it, it's good you see your own higher lows where it is now before you get in, because here is below that support line and we have another support line here. Is it staying there for a while and come back to here? It could. There is a possibility it might touch base with this, but we just feel like it has now come back to it for a while, that this could well be the valley line, but there is a chance it might come back to this one. So that's why you just want to make sure you are seeing a higher low from there before you get in. So by looking at it here, if we want to compare those lows, and this is a lower, an obvious low here, I can trace it, and I will, the reason why I go this route is because I'm touching base with that second one there, and I have a line like that. So we have an uptrend there, but then it pull back below it. So it will be good for you to see it start making higher lows around here, going over this support line here before you make any purchase. So because again, we only have one higher low there, this is higher than this one, but then we don't know what Monday will be, a red, a green, we don't know. So that is, you know, those things I will be looking for. It's just you trying to figure out if it's done going down and it's getting ready to start going up before you make your purchase. So I purchased a little early, but in overall I remain in a 3 months negative, and from June up to now I'm positive in it, at least in this purchase, but still nowhere near to be positive in this one. So that is how I use the candlestick to analyze the charts, to know, to determine where I want to buy the stocks. And then when I purchase it, I will just keep analyzing it, comparing where the price is to where I want to exit. And we like to use the next new high as our first exit strategy, and we have 3 exit strategy, but I'm not going to talk about them in this video. We talked about it in yesterday one, but here we just want to talk about the candlestick. And the candlestick, I don't really try to pay attention to the shape of the candlestick to determine if I want to buy or if I want to sell. I pay attention to the color of the candlestick, which is easier, and then pay attention to which one is higher, which one is lower when it comes to those pullbacks, those days that the price drop, to see if the price pullbacks are getting higher and higher. That way I know that the stock is going up from the support line that I like to buy. If it's not around the support line that I like to buy, it does not matter to me. I'll just analyze it and I'll go to the next. So that is NVR. And while we are talking about NVR, we can go to our record here for NVR. So NVR, okay, so you can see we have those 2 purchases there. So it was on the 10th, so that will be on that green bar that we purchased it, and the following day it became negative again. So we purchased in 2024 we purchased only one for 9,800, and then in 2025 we purchased 2 for 7,500 a share, and we have not sold any of those yet. So you can see we still have the date side blank for the sold section of it. So for 7,500 for the second one, you can see that for the price it closed last day of last week, what we pay for it is lower than, you know, what the price is right now that it closed. So we are positive in this purchase, but we are now positive in the first purchase that we have in October. But yeah, So and those are things you have to keep in mind. So we got in little early in 2024. I mean, we are using a different strategy there, and that trend ended. So therefore we got trapped in it negative, but we just kept it there because again we know that it's not going bankrupt on us. So it's a strong company, a large company. It has been around for years and it will be around for some years. Therefore, it will turn around. We'll just stay in it for a while. So when it reached the trend line that we like to buy at, we bought some more. The thing is, because we purchased one share here and two shares here, as it start going up, before even surpass the price we pay for this one, we could start seeing a profit in overall trade. Because when you total both costs and then you total the whatever the price will be, I don't know how to explain it. Do you see the price right now? So we have 3 shares. So when you take 3 shares times that, and then you total how much we pay for that one share and how much we pay for those 2 shares together, and you do the subtraction between the two, as the price start going up, at some point we'll start seeing a positive number between those two subtractions, the total cost minus the total sales. If we sell it at that price, for instance, we'll start seeing a positive number before even surpass the price we pay here, because we purchase more share at a lower price than the price we pay for the highest price, 1 share against 2. So that 2 share at a lower price could help us, could play in our advantage as well. But again, we like to see the price surpass the first purchase, the highest price, before we sell. And our first exit point is going to be when it reach a new high. But then when it reach that, we will pay attention to the previous cycle to see if it reached multiple highs before it was done, and the answer is yes. Therefore, we might remain longer in the trade before we sell it. Half the time, half the previous cycle time frame, if that makes sense. If we take this circle, for instance, when it starts reaching a new high around somewhere here, it did it for at least 8 months or so. Therefore, we could, when it reached a new high, we might decide to stay in the trade for 4 months, for half that time frame, or when it reached a specific price. And that specific price can be determined by using a ratio, taking the previous high price divided by the lowest price at that support line of that, at the beginning of that circle. So that will be to take that 9,900 cc 4 divided by, I round it down, divided by 5,254. I believe that's what I saw before. That is giving me 1.9, but you can just say 1.8. So therefore, if this is the beginning of the new cycle, the lowest point is going to be 65.35. So 65.35 times 1.8. Then we will say that when it reaches 11,763 or so, we will sell it. So the first new high, then from there, do we want to sell it? No, because it could continue going up for at least half of the time it went up during the previous cycle. Therefore, at least 4 more months we can stay in the trade, or when it reaches 11,763 we can sell it. So those are 3 different strategies to guide us to sell the stocks and get out and keep the accumulated profit that we accumulated from getting in the trade around the support line and remaining in the trade all the way to the peak of the mountain. But we want to get out before it was done going up and it start going down. So we like to buy at the beginning of the circle and sell it somewhere along that side, along the upside of that circle, that cycle as well, before it start climbing down to the valley again to start a new cycle. But that is to this extent that I use my candlestick in my chart analysis to analyze those upward growth large cap stocks using long uptrend long swing trading strategy to determine where I want to buy the stock and where I want to sell. I only pay attention to the color of the candlestick so that I can determine when the price is going up, when the pullback becomes higher, when I start seeing higher lows, for me to decide that, oh, it's done going down, it start going up. Therefore, I want to buy at a first or second green bar that follow a pullback. So I use the color of the bar to make my buying decisions and probably to sell it as well. I like to sell it on the days that I see a green bar. But sometimes when I know that I'm going to sell it today, even if it's a red bar, I could sell it, but it's rare. So I like to buy and sell it on green bar days. But yeah, that is how you can use candlestick charts to do your swing trading analysis, to buy and to sell. So we spend quite a bit of time on NVR. The second one is ORLY. We can quickly take a look at ORLY. We have not purchased it yet. You can see we have a line here that we like to buy at. We have another one down, but right now the price is high compared to where we want to buy. And Friday the price went up. That's why we have a green bar there. But that's all our analysis is about when it comes to candlestick chart. Compare where the price is to where you want to buy. If it's far away from it, there is nothing you want to do about it. If it's going down to it, you'll know it as well. As you start seeing lower lows, you know that, oh, this stock is going down. But it reached a new high not long ago. Therefore, this drop here doesn't mean much to me. It could just be a pullback a little bit and could go up, or maybe it's done going up and it will just start going down. We don't know. Either way, it's far from where we want to buy. Nothing we want to do to it, but just keep looking at it. So, and by just looking at the chart like this, we may not even know if they are candlestick or what, because it's so small. So the only time we zoom in is when it's around the support line and we wanted to see if we are seeing higher lows. It's when I will zoom closer to see what is going on there, if I'm seeing a higher lows or not. But other than that, when I'm analyzing, I like to just look at it from far like this and make my decisions and say, oh no, this is far from where I want to buy. Let's check, let's analyze the next stock on the list. So thank you so much for watching our videos. We thank you very much for your time. We thank you for all your comments, and we thank you for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and NVR.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just that small, one share at a time, to test your strategy against the stocks you want to swing trade using that strategy. And once you have a confirmation that your strategy is comparable with that stock, Charles, meaning you have at least $1 profit after you pay your brokerage fee, then you know that to increase your profit. Next time you are going to buy that particular stock, you just need to buy more shares of that stocks to increase the profit you are going to gain from that trade. For more of our swing trading tips, will you please check the playlist in the description of this video. Thank you for your time.